Okay, now I'm going to begin with the basics here. This is a base installation of what you get now when you install HGSI. George, are you on?
Yes, I am.
Okay. What I'm going to do is just take them through the process, okay, of what a newbie will see and what we can do to get the Morales and Cacher add-on in here, and then what you can do with it. So that we're going to break this down as a modular use of HGSI, because that's what it's really become since you've been building these add-ons out. So if somebody wants to use a specific strategy, they can just stick with that strategy, and then they can add more later on. So today we're concentrating on Morales and Cacher, because Gil has been sending people our direction, and we want to make sure that they know how to use the product. So this is what you see with a base installation. And this is the chart that just popped up. Now, when you open it initially, you really, as a new user, I can understand that it can be very overwhelming. So I'm going to try to simplify that process for you now. And like I said, we're going to stick with the Morales and Cacher files today. But I want to explain a little bit about HGSI, what it is. It's a database of securities primarily, and those securities are housed here within the designer. And these are the reference groups, anything with a yellow or a manila folder with the icon, the red, green, and yellow icon. These are folders of data that cannot be altered. Now, if you want to alter data, you can always use and create your own user groups down here. I don't have any in here because this is just the base installation. I do have smart groups that came with the initial installation, and you can see that Morales and Cacher smart groups are right down here. Now, smart groups are groups of stocks that are created each day during the daily update, and they're dated with that day's date. And what they do is they go in and select, the smart groups are filters and combos that go in and select stocks which meet the criteria, and then the best 25 stocks, if there are 25 stocks, are placed in these M&K user groups. Now notice that there were not 25 stocks yesterday, because yesterday was also a very weak day in the market, and there just weren't that many stocks that met the criteria. So if you see your smart groups and they aren't filled out with 25 stocks or ETFs, that means there just weren't enough candidates. I just want to point out that there are other smart groups here. I'm not going to talk about those today. I may talk about one smart group within the Ian Woodward and Ron Brown groups, because it has something to do with group rotation, and we may be able to apply, well, we can apply that group rotation to Gil's views, filters, and combos. Now what I'm going to do is I'll just stick with this viable gap up smart group. What this does is it looks for stocks that have a viable gap on heavy volume, and the gap is up 1%. Now I'm going to just flip through to the warehouse, but before I do that, I have to go in and get the add-ons, because we're incomplete at this point. We have the smart groups, but we don't have anything else. So let me show you how to do that in case you don't know how. All you have to do is go to your help menu and go select the add-ons. It will take you directly to the add-ons page, and you can see that there are multiple add-ons here. You do not need to download the smart groups because nothing has changed since this installation. If other smart groups are added, then you would want to update your smart groups. But for now, all I need are the Morales view, filter, and combo setup. So I'm going to click on that and download it. And I have to make sure that HGSI is closed. So I'll close it. I'll double click on this. It's a very simple process. Okay, that's all there is to it. And then I'll reopen HGSI, and I get a message that new system files are available to upgrade your current views, filters, combos, and groups. And it will overwrite anything. So if you want to make changes, you need to make changes down in your user area. And that goes for filters, views, and combos. You don't want to go in and, well, you can duplicate within their folders, but I don't want to get into that right now. Just remember, if you alter anything, any of the original views, filters, or combos, and you do an add-on update later, you will overwrite your changes unless you change the name of the original. So that's all there is to it. The import was complete. Now let's go back to that designer, and let's just stick with these Bible gaps up, and I'll go through these others too. I just want to go through these sequentially. Then I'm going to click through to the warehouse. Now I'll open this up. So I've added the M&K warehouse views, and if I click up here and open this up, you can see that they're added right here. So now I have the view for the Bible gaps up, and I'll just click on that, and it takes me from the folder which is in the designer, which contains these 18 stocks. There were not 25 because, as I mentioned earlier, yesterday was also a weekday. Now what we have here is a view with multiple columns, and it shows information like the percentage gap, which is one of the main components of this filter. Also, we have a column for the volume, comparing the volume to the 50-day moving average volume, and you can see that these numbers are huge compared to what the average volume is. This is on a percentage basis. I'm going to sort over here on the raw combo. Now for you people who are totally new to HGSI, the combo is a very important component of the way we work. And now the combo that is attached to this view, and I'll just do this to show you how this works. I'm clicking on this icon here with the pencil, and it brings up a view, and you can see that there is a filter that's attached to this and a combo ranking that's attached to it. So the filter filters out the stocks, and then the combo ranks them according to the criteria which is found in the combo. So I'm just going to open up this combo. You can see that it is connected to this. It has the same name, and I'll just click on Edit. I'll move it over here, and I'm not going to go through all of these right now, but I just want to give you a feel for what this does. It is both technically and fundamentally weighted. So the force indexes, which may be new to some of you, it's a formula by Dr. Alexander Elder, and we've taken his folder and we really use it in a unique way. But essentially the formula is today's close minus yesterday's close times today's volume. So it is a demand supply indicator. So if there's a lot of force based upon the 2-day exponential moving average of that force, that is most heavily weighted. And then the force 13-day is weighted heavily too, and then so is the white body, which is a candle body. And then We also take the group movement into account on the 1 day and the 5 day, and then you can see the relative strength is here. There are some fundamental factors here: group rank, EPS rank, dollar volume, and so on. All of those are factored into that, and the stocks which best fit that criteria are in descending order here. So LifeLock, based upon what the combo is suggesting, or when it's applied, it is the best fit. And if we look across here, you can see that yesterday it had a 5.3% gap, and the volume was 324.4% above its normal 50-day moving average volume. And the force indexes here are both green, and you can see the number of days since they fired. So let me just bring up the chart. Now, this is a chart that came installed. The first thing I would do if I were a newbie with this chart is just go in, right mouse click, and deselect auto zoom. Because if you leave auto zoom on, it's going to come back to the default zoom every time. Now remember, when I installed Gill's views and so on, I also installed Gill's charts. So if I open this folder up, we now have Gill's charts. Now I'm going to go to the Bible Gap Up chart. As you can see, George has arranged these so we have a chart for every view and for every smart group. Now if I click on the Bible Gap Up chart, you can see that there are a series of green lines in this chart for LifeLock. This is what we call our visual backtest filter. What that green line represents is a buyable gap. So you can see that in LifeLock there was a buyable gap on Thursday, yesterday, but there have been several buyable gaps here. Now they don't all work out, of course. Nothing is that easy, but most of them have been profitable. This showed a profit until it rolled over. This was a great buyable gap down here coming off of this consolidation area, starting to form a cup. But that was a buyable gap. Here's another one that was very profitable. This one moved up and then pulled back, but notice it did not fill in this gap. So I believe that Gill generally holds these unless the gap is challenged. I don't know what his current strategy is, but at one point that's what he was doing. So using that philosophy, this would have been a gap which would still be in effect, and then a couple more buyable gaps. Now this is getting really extended, but you can see that this worked multiple times. Let's just go through a few of these. Now here's a stock like eBay, which even though there's a buyable gap, this is not the type of stock that you pay much attention to just because it is so loose. But my point is that each one of these stocks which pass through this filter is going to have at least one buyable gap signal in here. Here's Netflix. Obviously there was a buyable gap yesterday. But this was a great buyable gap here. This was a great buyable gap which did get tested at support, but it took off. This was an exhaustion gap. So you get the point here. If you want to use these views, when you do use these views, if you want to see where other signals occurred, use the corresponding chart. I need to get to the charts again. Just use the corresponding chart, and in this instance it's a buyable gap up, and then you'll have these visual filter backtests. Now I want to show you something else here. I am in the smart group. Now this is a shortcut key to get you to all securities. To do that, hold down your alternate key and hit your shift key, and if you watch up here, you'll see that it takes me to all securities, and then I'm going to reapply this filter, and what do we have? We have the same stocks that are contained in the smart group. Now, if generally in a normal market where you may have 50, well, that would be a lot of gaps up, but anyway, you'll have multiple stocks in a strong market, and especially in a market that's taking off, you're going to see many stocks gapping up. There may be a lot more than 25 stocks, and if you want to see all of those stocks, all you do is go into the all securities and apply the M&K view, which is most appropriate for you. That is something I wanted to tell you just to get it out of the way. You don't just have to use the smart groups. You have the option of applying these views to all securities, and then you're going to be able to see a lot more candidates in a normal market. All right, well then we'll move ahead. I'm going to go back to the designer. Let's just move down through these views one at a time. Now here is the ETF pocket pivot. So if I use the corresponding, well, this is a good example here. Here's the ETF pocket pivot. I'm still in all securities rather than the designer. You can see that there are 42 candidates here, and this is also based upon the combo. Now if I go to the designer and click on that same folder, the smart group folder, you can see that it automatically cuts it down to 25. So if you want to see more candidates, use all security. Make sure that the filter is applied. This icon up here turns the filter off and on. You just have to make sure that you engage the filter if you're using all securities. Okay, so let's go ahead and look at this. You can see that yesterday there was money flowing into well, this was a short emerging market ETF. This is a muni ETF. This is a global gold miners ETF. Gold has been moving. Here's another short, and so on. So yesterday, this is what was coming up. And if I let's just go ahead and use this short emerging markets. And now I want to go to the corresponding chart. This would be the M&K ETF pocket pivot. Now remember, this is an inverse chart. And you can see every other instance of when a pocket pivot occurred. Now that's the view that I'm in, ETF pocket pivots. So all of these blue areas represent pocket pivots. Now obviously we've been in a very choppy market because this really has gone nowhere. It's fluctuated between around 28 down to 26.3, but there have been multiple pocket pivots. I'm sure if those of you who follow Gil know what a pocket pivot is, so I don't think I need to get into that right now, but this is the corresponding chart. In addition to these pocket pivot signals, you can see that we have the force indexes in here, and also we have kahunas down here. Now Ian's my partner, and he came up with the kahunas. They are big moves in the Bollinger Bands. But what it means, blue is obviously good, and red is obviously not good. So it's up and down, and that corresponds to many of these pocket pivots and also to the force indexes. Now, as you know, Gil likes to use blue and red. I generally use blue and green in my charts, but it's a personal preference. And that's what he's used to, so that's what's in his views, combos, and charts. Now let's look at one more here. Here's a Direxion 3X bear. You can see here's a pocket pivot, and you can see many other pocket pivots here. Now let's just move on down to the next one. I'm going to just go to the next smart group. This is the M&K Force Index Pocket Pivot. And I'm going to bring up the corresponding view. Now Gil has been using the force indexes also. Originally, when he started using the product, he didn't use it much, but as we get into his chart, I think he calls it his secret weapon chart, you all know that he has been using the force indexes also. Why? Because they really correspond many times with pocket pivots, and it's just a good confirmation. Let's just take a look here. I'm sorted on raw combo. This is the same demand combo. United Rentals comes to the top, and what this is doing, it's giving us, I have to go to the correct corresponding chart. We're going to go to the force and pocket pivots, and this shows you how these work in conjunction, and that's, I believe this is the reason he has started using them. These lines down in the body of the chart here represent pocket pivots, and notice how often they also correspond to the force indexes and also the kahunas. So big move in Bollinger Bands down here. The pocket pivots are in effect, and both force indexes are firing. So when you get multiple signals like this, it gives you more confidence to take a trade, especially when these stocks are coming out of a consolidation area like this. I mean, back and forth. Now here was a pocket pivot. We had a signal here too, and then it kind of pulled back, didn't do much. Here was another one, same thing. And then here, when we had all of them working together, a big kahuna, which is more force along with both force indexes and the pocket pivots, it really took off. Another thing you can look at is the group movement. Now, I don't believe any of Gil's charts have the group index incorporated in them, but there are several charts within HGSI that do. And oftentimes you're going to find that when these stocks are moving up, the groups are moving with them. These stocks, well, we like to say we call them wolf packs, because stocks move in groups like a pack of wolves. That's where the term came from. Anyway, let's just go down this list a little bit. I'll just do a few. This is Trinity Industries. You can see that there are multiple signals. They're pocket pivot, force index, kahunas. You'll see this time after time. That is why this is named the M&K Force Index Pocket Pivot. Let's move on down to the next one. These are IPOs. Gil comes and speaks at our seminars that we put on in Palos Verdes, California. He's come to the last several, and I've noticed more and more that he is spending some time or looking more and more at IPOs, and that's why I put this view in for him. Notice that the industry is not filled in most of these because generally, well, if a stock has not been trading for more than 6 months, it is still considered an IPO. So we have pocket pivots in here based upon IPOs now. So let's just take a look at this, and you can see obviously that this is an IPO, and we do have a corresponding pocket pivot view for that. So there's a chart, I should say a corresponding chart view. So there is a chart view for every one of Gil's smart groups up here. Let's just go down the list here quickly. Here's another IPO. Pocket pivot happened right here around 35 and an 8, and you can see yesterday on a very weak day it got up to what closed about a little bit above 38. This has been a great great one here. Look at all these signals. A little late here. These are beautiful, multiple pocket pivots. A kahuna down here, force indexes firing at the same time. So you can see how these indicators really complement one another. So don't forget to look at IPOs. There have been some really strong IPOs. Now notice as I go down the list, these are not nearly as good as the ones on the top. That's because the combo ranking is giving us the strongest stocks based upon what's in the combo. These go to the top of the list. Then we get down closer to the bottom. You can see that these are not as good candidates. So make sure you always sort on raw combo and then work your way down through the list. Now I have one more group here. This is the standard pocket pivot. Now I need to change to pocket pivot. Now you can see that there are very few columns in here. This was the original view that we did for Gil and Chris based upon their criteria. So that's the only, or these are the only fields that are in here. Now these requirements, if you've read the book, you know that these are more stringent or very stringent. Let's just look at this filter. The last close here has to be $11, and the average dollar volume, what is that, 7 million? RS rank of 80, last close net change greater than or equal to 0. It has to be within a 10% range of the percent close of the 10-day moving average, less than 8% above, and greater than 2% below. And here is the key component. The percent volume divided by the greatest previous 10-day down volume has to be greater than 0. In other words, the volume has to be a lot stronger today than it has been over the previous 10 days, and then, of course, the common stock. So we did get 22. We didn't get 25, though. Yesterday, since it was a down day, there just weren't that many pocket pivots. Now, you can see that these stocks are some of the same ones that we saw yesterday. Now, I need to go to the corresponding view. Again, this would be the M&K pocket pivot view. Just remember there is a view for every one of these smart groups if you want to see where the signals fired in the past. Lots of great signals here on pocket pivots with United Rentals. Trinity Industries, a little bit looser, but lots of good signals. Now I'm going to go down the list. This is a drug company. Now as I get down the list, see these are not quite as good as stocks, but I suggest that you flip through. If there aren't that many stocks, if you're just going through the list in the smart group, I would just flip through all 25 of them looking for candidates. But obviously, it's better to get them coming out of a retracement area like this and then big volume coming in. Let me point this out. You can see the pocket pivot volume right here. It's greater volume than any volume during the previous 10 days. So that's the way it works. Now, I know a lot of you are interested in Gil's other chart where you find it. Well, the other chart, Gil's secret weapon, is both a bar chart and a candle chart. He calls it his secret weapon, he told me, because before he started using this chart earlier this year, he was actually down a little bit in his portfolio, and then when he switched over to this chart, I believe he said he was up 70% for the year at that point. Now, let's talk about this chart, and you can see that it contains many of the indicators that I discussed before, but there's more here too. I'll start from the bottom and work up. These are some market indicators that Ian developed, and Eureka is green. I'm sorry. Eureka is green, which is positive, which means it's a big up day in the market, in the NYSE. This is based upon NYSE criteria. The orange is the Phoenix, and that is generally when, well, it is when there's a big move down in the market. But what has happened during this strong bull run is the Phoenix indicator has, generally, it has indicated the end of the pullback because it was an oversold market, and then the market bounced after that. But these are just here to give you some guidance about the market. Notice that there has not been a Eureka for a long time. This goes clear back to, what is this, October. And that's when the market took off and United Rentals took off at the same time, and it really has not looked back. So that's what this window does. Now this is the volume window with a 50-day moving average line in here. That line represents volume over 50 periods. And then these are all of Gil's moving averages. He's going to have to explain to you what he does with those. The 10-day, the magenta, is a short-term support moving average. And then if you look here, this is all color-coded for you. This is green is the 20-period exponential moving average. The 20 and 65 are exponential. The others are simple moving averages. But they're color-coded in here, and you can tell what they are. He uses them for support and to get a general feel for how a security is performing relative to multiple moving averages. And that's really all I'm going to say about that. Now we have the force indexes once again. This is the force 2. This is a longer term force, the 13. And the way Gil likes to use these two is the 2 is obviously a much shorter term indicator, and what he pays particular attention to is the 13-day force index, which is the second window up, and if it remains blue and the red pulls back, which is the force 2-day, that's a very short term pullback, slightly oversold based upon the force 2-day. But if the 13 remains blue, that means that the pullback is generally on light volume. So it's not a severe pullback. And more often than not, it's an opportunity to get in. So here, using this, especially in this long run here, you can see that there were, what, 7 or 8 opportunities on pullbacks to move into United Rentals based upon the force 2 and 13. Once again, the kahunas are in here, like they were in some of those other charts, and that gives additional information both up and down. Now right here, I'm going to put my crosshair on. You can see that the kahuna was to the downside and both force indexes were also, so everything turned red, but it just happened to be a shakeout. Now, you don't know that at the time. That's a pretty scary looking candle at the time, and you can see that it's on heavy volume. But if you look at the next day, you can see that the volume subsided with the candle. It's really an inside day on that prior candle, but you're going to get these signals in a strong bull market like we've had until the past a few days. Oftentimes you're going to get these shakeouts, but notice how quickly the 2-day force turned blue again. It happened Didn't happen on this day, but it happened right here. So that is an indication that the stock is turning back up. Now this indicator up here is, well, these two indicators work together. They're the Bongo Weekly and the Bongo Daily. Now what these are relative strength indicators. They're internal relative strength. It's the internal relative strength of the security itself. Now this, obviously, the Bongo Weekly is a much longer view of the internal relative strength. And notice how this corresponds. It went from red to blue at this point, clear back here. So this corresponds to this entire run that this has been on. And it's kind of, well, it's a buffer, I guess is a decent word for it, to take your emotions out of the market. Now, going back to this area right here where we had the big red candle down in the Bongo Daily, which is based upon the daily move rather than the weekly move, it turned red, but notice that the Bongo Weekly stayed blue. So it just depends on your ability to sustain big one-day moves down or down moves like that. If you believe that it is a short-term move, you can put some more faith in something like the Bongo Weekly. Doesn't always work out because the Bongo Weekly is slower to react generally. But a lot of people just trade stocks in the direction of the Bongo Weekly because it's telling us that internally the security is very strong. So that is Gill's secret weapon chart. I have both a candle version and a bar chart version, whatever you prefer. I think Gill probably uses the bar chart version more often than the candle version, but that will give you an option, plus you have the option of using all of these other charts in here which correspond to each one of these views and to the smart groups. So you have a bunch of weapons here. Obviously, most of these are all bullish or long views, but we do have the ETF pocket pivots, which will find the ETFs that are the inverse ETFs, which you can trade against the market or with the market if it's going down. So you have a lot of options in here, and these indicators work very well, and they work well in HGSI. Okay, there's a question on the secret weapon chart. When the kahuna is up and down, signals of blue or red, do you recommend waiting a day or two for confirmation before triggering a buy or sell? Well, that's a pretty tough call. I would use all of them in conjunction. If you're getting multiple signals with the kahuna and the forces and the pocket pivots, there's really no reason to wait. I mean, you do your position sizing and you take the trade. You know where you're getting out. If you're wrong, you're wrong. And that's the way I would handle that. How do you recommend handling positions not to get shaken out in a choppy market? Well, first of all, stick with charts that are tight. I showed you what eBay looked like. Forget about a stock like that. Don't even consider it. Look for stocks that are tight, like the United Rentals chart that's up on the screen right now. That was choppy in through here. When it broke out of that consolidation area, it became a much tighter chart. I would not say that this is an extremely tight chart. It's tight to neutral, but when you put a position on, first of all, you need to know your maximum risk. There's always a possibility you're going to get shaken out. The best way to avoid it, though, is just to stay away from those stocks or ETFs that are all over the place. But what you want to do when you put your position on, for example, let's say you took this trade here, somewhere in here. You always want a stop that's below a minor support area or a support area. Down here, if you took this trade, your stop has to be down here. There are no guarantees about not being stopped out, but I'm going to repeat, the best way, in my opinion, is to stay away from the really loose charts. How am I moving quickly from one chart to another? Okay, this is the quick pick view right here with the finger. That opens up a window, and then you can quickly move from chart to chart. And then you want to get rid of it, you just move it out of the way. Jim, do you want me to explain more about the bongo indicators? Blue is good, red is bad, essentially. But it's just about the internal relative strength of the. Are there any M&K views reports to identify short opportunities? We're going to put those back in. I think that's all the questions. So I want to show you one more thing, and then we can answer more questions if you have them. Let's go back into the designer. I mentioned at the beginning of this that this is something that you may want to add to your arsenal. In the Woodward and Brown smart groups, these are smart groups based upon our filters and views. These come with the original installation of the program. You don't have to add more. They're already there for you. But if you, for example, want to work only with growth stocks, here is a growth stock view with 25 securities based upon quarterly earnings growth. So you could apply any of Gill's views to that smart group. But the place that I think where it would be most effective, there are 100 stocks in each of these two groups. Stocks and groups moving to the downside and to the upside. So using this as a base group, I'm going to click back through to the warehouse, and then I am going to apply the pocket pivot filter by clicking on that, and notice that the 100 securities have gone down to 8 securities. So what is this telling us? It's telling us that these are stocks and groups that are moving to the upside. That particular combo selects from a list of 2,000 stocks and takes the top 100 stocks that are moving up based upon that original combo that I showed you. So we know that these groups are moving up, and we know that these stocks are moving up if they're included in this 100. And then by applying Gill's pocket pivot view, know that this is a stock in a group that has been moving. Trucking has been moving. And you can't see the group chart on here or the group line on here by working from this folder that they're moving. Let me just, I've got the time. Let me just show you right here. Let's take his chart right here, and I'm going to click on Choose Create View. I want to go to his secret weapon bar chart here, and if you want to experiment, do this. You just select a chart and then click on Duplicate. Very simple. Rather than going in and messing with any of the original charts, just duplicate. And then click on Edit. I'll go to the View, and I'll put Group Added, Group Line Added, and then I'll go back to the window, and I'll go down to the price area, because we want the group line to be where the price area is. I'm going to add the indicator, and I'm going to scroll down. I haven't done this for a while, so I have to find it. Group Index. right here. It's under Other. So I'm going to double click on that, and I have to use private scale because this scale is for the price. We want a private scale. And I use a gray line so it's not obtrusive. I'll click on that, and then I want it to be a dotted line. Now what this is going to do is well, first of all, I want to select the industry group. You can use the current group if you have a separate group of files, but we always or generally do it on the industry group because we want to see what that industry group is doing. So if I click on OK, notice the group index is in here now, and this is the chart that I duplicated, and notice that the group line is in here. But it gives us so much more information. So you can see that United Rentals has not been moving by itself. It's been moving with its group. And notice where the group pulled back, that sharp move down to United Rentals, the whole group pulled back. Same thing here. When the group is going up, United Rentals is going up. Here the group's coming down. United Rentals is holding flat, which means it's outperforming the group. And then when the group took off, United Rentals was going up again. So this, not every chart, but most charts that I look at include the group line because it's so powerful. Bringing the fundamental view into play. If you just look at this group rank is only 58. I don't know how much you newbies have played with the group rank, but a strong group is 80 and above when compared to all the other groups. But just because it's 58, as in this instance, it doesn't mean that the group is not moving. You can see that the group has been moving, and that's why it's always good to have a group line in a chart, or have a chart where you can refer to the group line. It just gives you a very good feel for what's going on. So getting back to my original thought here, you can use any of Gill's views, or the M&K views I should say, and apply it to another group. Let's just look at one more in here, Trinity Industries. Once again, with this group line in here, you can see the group was going up and Trinity was going with it. If I look at the fundamentals, you can see the group rank here is 70. But it's always nice to have a visual. Okay, now let's look at a few more views here. So let's say I'm interested in the buyable gaps up yesterday. I know the stocks and groups are moving to the upside. If I click on the M&K buyable gap up, I know out of these 100 stocks that 4 of them had a buyable gap up. Netflix was the most obvious one, and I'm going to zoom in. This is, by the way, this is why I took the auto zoom off. If I left the auto zoom on, it's going to revert to this all the time whenever I go to a new chart. When I take that off and then zoom in, it's going to hold this zoom as I go from chart to chart. Take it off, or I would take it off. Okay, so here's your buyable gap up. Now, Netflix held up pretty well today, and there's tremendous buying power in here, as you can see. Had a big kahuna yesterday. See, the bongos were both red here because Netflix had been going down. Now this is what I mean about the Bongo Weekly being late. Here's where the Bongo Daily turned red. It turned red along with all the other indicators, but the Bongo Weekly did not turn red until it was down here near the bottom. So you need to keep that in mind. These 3 plus the kahunas are short-term indicators. This is a longer-term indicator. The Bongo Weekly is. Let's just flip through a couple more of these. You can see there is a gap up from this area to this area. It's a biotech. Here's LifeLock with another gap up. Here is the prior day's close. Here's the close, or here's the open. Traded down but closed up here. eBay stock I'd stay away from because of the looseness unless you're a very short-term trader. And that's it. There were only 4. But you can use, there aren't any ETFs in here, obviously. Here's the force pocket pivot with both the force indexes and the pocket pivots. Once again, you're going to see a lot of the same stocks in here, but it looks like there's a couple more in here. But I think this is a good way, in addition to looking at all securities, if you want to narrow your list down just to stocks and groups that are moving to the upside, this is a good way to do it. Gil has told me multiple times that he gets his best ideas from HGSI using these filters and views, and also he does look at the groups that are moving every day because that's important to him. Let me show you one more thing, and then I'm in the stocks and groups moving up. This is another feature. I'll just take the filter off here. This is a feature that I use every day, and you can do it too. It's a spectrum analyzer. If you just use this drop down and go to the industry category and click on that, this is a visual breakdown of the stocks that are included in this view. And biotechnology has dominated this view for weeks now. And that's what you can do every day. Just apply this to the view, use a spectrum analyzer, drop down to the industry. I see I've got another question over here. Yeah, Mike McDonald wants to know why I assume you're talking about the group ranking. Is that correct, Mike? There are 2 different formulas. If you use Ian Slow in the ranking module, if you click on the ranking module, but you click on the ranking module, it's going to default to the groups, and it's going to give you a group ranking here. Now, Ian Slow relative strength is based upon a 6-month period. In a stock, if we have a different, let's go into biotech. And, well, this one just happens to correspond to 98. But they will not always do that because the formula is different. This relative strength number is based upon a year and rather than 6 months. But these numbers will not always correspond. Anyway, that's what that is. Can the screening criteria be adjusted? You can make your own screens. You can make your own filters, yes. But we really can't adjust the criteria that are in Gil's filters. He gave us that criteria, and we just pretty much stick with what he has. Scott, you added the group line, but it doesn't display it across the chart. Did you select private scale? That's what you have to do. Otherwise, it's not going to work. I'm confused with the HGS 100 and moving to the upside smart list. They're very similar. What are the main differences? The main differences are that the HGS 100 has some other criteria in it, like accumulation C minimum and so on. The HGS stocks and groups moving to the upside is strictly combo based. The whole thing is based upon the demand combo. So there are no other criteria in the filter. I think it's just $5 trading 200,000 shares, 250,000 shares. So it's all combo driven. Whereas the HGS 100 has some other fields in the filter. But you're going to get a lot of the same stocks. But the group stocks and groups moving up on that day is going to give you an immediate feel for what is moving now. Can you redo the background index indicator on the chart? That's from JB. Are you talking about this group index? Okay, first of all, I duplicated the chart. What you want to do is you can go to a chart, and then by clicking on this area here, it's called Choose Create View. Then you just click on Duplicate. Once you've duplicated that chart, you want to edit the chart. And then you want to go down to the price area. And then you add an indicator. You go down to the other, double click on group index. That will bring this up. I changed the color to a dark gray, and I selected use private scale. You have to use private scale. And then select the industry group index because you want the industry group. Now that's all there is to it, and then you apply it to show up in the chart. Do you have a squeeze screener working on that? Well, you answered that right, George. Is changing the pivot conditions. No, you have to use Gill's formula for pocket pivot. You can set up other screens and filters, like the force index. Like you saw, the force index corresponds very often to the pocket pivots and so on. So there are other ways to come about that. Have a good weekend, everybody.